Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Where do we sort of start? Pretty interesting times still. You've obviously had the military strike from the US, UK and France on Syria. That has sort of been received reasonably well as can be expected, in the fact that there were no casualties on the ground. It looks like it was pretty strategic targeting on various sort of chemical weapons plants and installations that the US claimed anyway. Obviously Syria and Russia and Iran claimed they weren't. But I say, it's at present there were no sort of casualties out there. The next round of attacks has been more financial, and looking at sort of imposing restrictions on sort of bank accounts and assets, etc. And that has included Russia as well. Putin's obviously come out and said, this is a grave injustice. You're insulting Russia. We had nothing to do with it. There were no chemical weapons involved, etc., etc. Clearly most of the evidence point that there was chemical weapons involved, and it's just a question of whether how much sort of Russian involvement was there. So that obviously makes for a pretty tense sort of geopolitical sort of situation on the global economy. Trump's still got his own sort of issues at home as well, with various investigations into his lawyer, and also as well you've got James Comey, the director of the FBI that he fired, has just released a new book and come out with some pretty telling revelations in TV interviews, etc. Which really is pretty damaging again for the president. Again, obviously Trump has sort of countered back, via his favourite sort of social media platform, Twitter, saying that, Comey will go down in history as the worst FBI director there's ever been. As it will just be very interesting to see how it sort of plays through. And if we can sort of put that a lot aside, you've obviously got earnings season in the US. A lot of the banks reported last Friday US time. Earnings are okay, they sort of beat estimates, but when you're breaking down the numbers, there was maybe a little bit of disappointment on some fronts, and it's just going to be interesting now to see how the rest of the sort of US corporates report in the next sort of couple of weeks. Really on the back of the Syrian situation not really escalating, we've seen a little bit of a sort of markup on US equities, and that will sort of filter through into global equities at the start of this week anyway. Also as well, there seems to be a little bit of sort of heart that the potential sort of trade war hasn't really sort of heated up too much and haven't really escalated. And again, a lot of sort of back channel talks to try and take some of the heat out of that and take some of the pressure off there and come up with some pretty reasonable trade negotiations and trade deals over the next sort of coming months. A little bit of action on the currency markets though. Russia and China sort of look like they've allowed their currency to sort of fall a little bit, potentially a little bit of devaluation. Now, so that is obviously going to impact on their trade terms. Obviously, President Trump's not too happy about that, but again, it's just going to be interesting to see how it sort of plays through, and maybe it's sort of another sort of chess move in this sort of whole sort of trade negotiations. Oil is obviously trading a little bit higher. WTI well above 65, Brent well above 70. And that is a sign that maybe global growth is not going to be impacted too much. But also as well, maybe potentially some of the geopolitical issues maybe might just tighten a little bit of supply out there. Brexit creeping along at a pretty slow pace, and really getting very close to sort of crux time now. Just going to be interesting to see how that sort of plays through. Certainly you need to get some pretty hard negotiations. Also probably in the UK to get Theresa May to convince the rest of her party and Parliament that it is actually a good deal for the UK, and then obviously get it passed by the Parliament so it can be sort of ratified and sort of move forward into 2019. Growth for the first quarter was encouraging, 6.8, sort of pretty reasonable. It's down a little bit from the sort of 6.9 last reading, but still, comfortably above sort of 6.5, which most people sort of feel it will sort of gravitate towards by year end. When you compare that with the rest of global growth, it's still a pretty good rate. In New Zealand, market ticking along at a pretty good rate. Nothing too substantial. Interest rates certainly look on hold for the next, sort of 12 months. Certainly that's the indication from the Reserve Bank, possibly even a little bit longer. Just waiting to see, obviously, how the housing market reacts. Just going to be interesting to see how that sort of trades over the next sort of 3 to 6 months. Because certainly it looks like a little bit of heat is coming out of that market. As discussed, very good time to be checking those KiwiSaver balances to make sure you can get the maximum tax credit. If you're unsure on what needs to be done, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz. Likewise as well, if you're looking for income options, certainly sort of fixed income and term deposits are, a reasonably sort of low in terms of returns at present, around the sort of 4% gross. Now, if you are looking for options, there are plenty of options out there to discuss. And if you're interested in having a chat and see what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.